Hello traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be covering the beginner's guide to reading a price chart using price action. All right. So if you have ever looked at a chart and perhaps you felt overwhelmed by all the candles, the wicks and movement, then this lesson will make it simple. Okay. Price action is the purest form of market analysis, all right, because it shows you exactly what is happening without the lag of indicators. Every candle represents a battle between buyers and sellers. It's as easy as that. And by reading them correctly, you can see market sentiment in real time. When you are able to read the candlestick patterns properly, you can see market sentiments in real time. Now, when you master this skill, you can trade any markets, whether it's Forex, stocks, crypto, or whatnot, right? Because price behavior follows the same principles everywhere. A candlestick shows the open, right? Let's just use this long candle as an example, right? So each candlestick shows you the open price, right? It shows you the close price. It shows you the high, that is the highest points that the candle reached, and the low, which is the lowest points, that the candle reached. Okay, so that's why we have open, high, sorry. Okay, so that's why we have open, high, low, close, right? So that's for a bullish candle, and same thing applies to bearish candle, but the open is going to be up this time, the close is going to be down, but the high and the low remains, right? So open, high, low, close. Each candle has an open price, a low price, a close price, a high price, right? The body tells you whether the buyers or the sellers were stronger during that time. So if you have a green or bullish candle, it means that buyers closed higher than it opened. Okay, then if you have a red or bearish candle, it means that sellers closed the price lower than it opened. Then the wicks show rejection. When you see these shadows, these wicks, right? These thin lines on the top and the bottom of the candle, they are called wicks. So if you see a long wick at the top, right? For example, what we see happen here, if you see a long wick at the top, it means price was pushed up, but sellers forced it back down. If the wick is long at the bottom, buyers stepped in and pushed the price back up. So now, a trend is a consistent movement in one direction. Okay, in an uptrend, you will see higher highs and higher lows. Like what we can see happen around here, this was obviously an uptrend because you can see a series of higher highs and higher lows. All right. Now, on the other hand, a downtrend, is characterized by lower highs and lower lows. So when you are seeing lower highs and lower lows, it shows a downtrend. Okay. So it's pretty easy, right? Pullbacks are small moves against the trend, normal pauses before the trend continues. Price does not move in a straight line. You might have had that concept, you might have had that saying, right? So in every trend, there must be a pullback, there must be a move against the trend. Okay, so even when price is in a bullish trend, you must have bearish moves called pullbacks, but they are usually short moves, okay, before the impulsive moves continue. In a sell trend, you must have short moves called pullbacks, the upside, before the bearish move continues. Consolidation happens when price moves sideways. So the concept called consolidation is a concept that means that price is moving sideways. It is not trending up, it is not trending down, it's just going sideways. Okay, so that shows a state of indecision before a breakout. Recognizing these phases helps you know whether to look for continuation or reversal setups. Now, support is a price level where buying pressure tends to stop price from falling further. Okay, so a support level is a level where price is prevented from falling further. Okay, resistance is a level, where price is prevented from rising higher. Now, it does not necessarily mean that support and resistance levels cannot be broken. Of course, they they can be broken, and they are usually broken. Okay, but that concept is actually an important concept because it can show you areas of reversals, or areas of rejections in the future. So these levels are key because they are where momentum shifts often happen. The more time price reacts to a level, the stronger that level becomes. So if you have multiple reactions around the resistance, multiple rejections, it shows that that resistance is strong. Okay. In like manner, when you have multiple rejections around the support, it shows that that support level is strong. Okay. So you have to mark them on your chart so that you can anticipate reactions in the future. Now, reversal patterns like double tops and double bottoms signal a potential change in direction. This is an example of a double top. All right. You can see that here we actually had, we had price get to this point, it got rejected, and then get to this point again, and got rejected. This is a double top. Around the same price level, price was rejected twice. That's why it's called a double top. Okay. Then double bottom is just the opposite, right? In a situation whereby you have price get to around the same zone and it gets rejected twice. That's called a double bottom. Around the same support zone and gets rejected twice, called a double bottom. Now, that usually is a reversal pattern. You can see that after this double top, we had a reversal to the downside. After this double bottom, we had a reversal to the upside. Okay, so it's very easy to understand. Continuation patterns like flags and pennants show that the trend may continue. Now, by combining candlestick reading, trend recognition, and key levels, you can form a market bias, which is a reasoned expectation of what price is likely to do next. Okay, this is the foundation for every trade decision that you make. So reading a price chart with price action is about understanding the story behind each move. Learn to read the candles, spot the trends, mark key levels, and recognize patterns. With practice, this will become second nature. So if this guide helped simplify chart reading, click the like button and subscribe for more trading lessons. Okay, do not forget to turn on notifications so that you never miss a strategy breakdown. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.